Hey everyone, welcome to the StockPickProfits.com market update. It is 1/22, 2019, January 22nd. We're almost through the first month of 2019. Can you believe it? Time is just going by like wildfire. So it was an interesting day in the market today, right? We started off pretty decent. Let me get a little adjusted here. Um, we started out nice and decent, right? We had bad overnight futures on that China news and stuff. And then we kind of got a little bit of recovery in the morning. And then all of a sudden the bottom came out, right? We got a little bad news about this Trump trade deal with China. So, it's kind of interesting. We've been talking about this to our members. And what we've been talking about is uh, how in this trade situation, you're going to have these days, right? Like last week, we had the one news that just blew the market up, right? And then today we had a little bit of bad news, and then Jack, that's just kind of beat the market down. Excuse me. um, and so, you want to take it with a grain of salt and you want to trade smart, right? We keep talking about it. One of the biggest things that happened with the big sell down at the end of the year was it gave traders a chance to get ahead of the trade, right? We've been trading at these highs for so long that it seems like you're always either chasing a gap or chasing something, right? And it can get difficult to trade at those levels. The air is real thin. So what happens is we have this big correction, right? In December, November, December, October, about the last week of October. And then it capitulated pretty much on Christmas Eve, right? One of the last days of December. So it was pretty steep and it was pretty ferocious, right? This little sell down. But it gave stocks a chance to reset. Now, we kind of talked about it the last couple of days. What's been happening? We've had this V bottom. So that's just really not, look, anything can happen in the stock market, but a V bottom generally is not sustainable. So today probably was a nice pullback. Now, how the market digests this going forward will be interesting, but we've got earnings and stuff. Of course, we've got some huge earnings kicking off tomorrow, so we could see some catalyst from that. But I think right now, as traders, the best advice we can give is just stay ahead of the trade. You want to buy when they sell, you want to sell when they buy. You want to buy low, you want to buy high. Now, all these sound like these ridiculous old sayings that you've heard too much, but they couldn't be more true than they are right now. Stay ahead of the trade. We opened up a trade today in Home Depot. When it was pulling back there, it was like every other stock. It kind of got caught in that sell down. The market got down as low as about 400, a little over 400 points. And it picked up about 100 towards the close. So it did pretty good. The Dow Jones ended up at 2404 or 2,400. 24,404, excuse me. Where's a lot of work today. So reading charts and stuff, excuse me. We're down about 300 points or about 1%. Well, it's all relative, right? Take it into consideration with what we've done over the last 5-6 days. The NASDAQ held 7,000 real nice, 7,020. It closed at 136 points down. And the S&P 500 continues to trade in that channel at about 2,600. And it's kind of holding that channel. That 2,600 seemed to hold up real well. We've had it on a nice Fibonacci right now. We're kind of playing around that 50% retrace. We blew through that 38.2% retrace, and then 50% kind of became a little challenging. So we'll see how it works out over here. But the uptrend still looks like it's continuing. We're still trading over that moving average, and momentum's been real nice over the last few days. So let's see if we've got some carry through. Now, we don't want to get we always want to be concerned, but we don't want to make rash decisions when these sell downs happen. We saw it today with CNBC, right? That of course the bear market words had to come out and stuff. We're almost back in a bear market. 3 weeks ago, we were being told that the recession is coming or is here, is right around the corner. Then about a week and a half ago, we were told that oops, maybe not. And now all of a sudden, yesterday and today, after that China report, it's hot in Honolulu today. But after that China report overnight, all of a sudden the recession talk is back. You had Dalio in Davos, and he was talking he's talking down the markets and stuff. Ask yourself, you think they're buying stocks? Do you think they're buying stocks while they're telling you all this stuff? But anyways, that's kind of a nefarious thought there. But right now, really today, it was a good day to kind of maybe find some positioning and stuff like that. Again, like I said, for a change, we're not trading thin air and stuff. The sell down has brought the market where prices are reasonable. It's a nice reset. There looks like there's a good chance maybe we will sometime in the near future challenge those highs. But for right now, we want to trade what's in front of us. And it looks like we're still in that V rally. So we'll see. But you want to be cautious, like we always tell you, be cautious. Don't just start trading crazy. Don't start putting outrageous money on the board and stuff like that. The key levels that we want to watch right now are, of course, are what we've been talking about for the last few days, and that's the 24,000 on the Dow. We'd like to see it now make 25,000 and get over that. The Nasdaq was over that 7,100, but it couldn't hold it. It gave it all back today. Let's see if we can take it back over the next day or two. And then that S&P 500, it's still trading in about that channel around 2,600. And, if we can get, it looked like we were going to get a nice push over that 2,650, but it wasn't in the cards. So we'll regroup and we'll come back tomorrow. Like I said, we're not sitting in any other trades except we opened a fresh Home Depot. We still got that longer trade on GE that we like. GE had a rough day today. It was down about 40 cents. But, that's another one that's been kind of on a little terror lately. So, stocks have to consolidate. They just don't go straight up, 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 straight down, down, down. It's always like that. There's an ebb and flow to it. They have to consolidate at levels and then they resume. That's why understanding the long-term trend is so important. Pretty much the first thing you do with every chart is try to find a trend, right? An overall trend. So then you can use that as a barometer for all your other technical analysis. So look, we're going to do the disclaimer at the end of the show today. So past performance is no indicator of future performance. We are not registered investment advisors. Nothing in this show should be taken as an offer to buy or sell any security. Always consult a professional before you make any investment decisions, and you can read the rest of the disclaimer in our description. So look, gang, we had to shake out the cobwebs after the 3-day weekend, after the good football, nothing but controversy. Amazing that a league that's worth billions and billions of dollars can't get officiating right. It was really as a travesty for you non-football fans. I'm sure you've heard about it. The city of New Orleans is really angry today. The Rams, the city of Los Angeles is feeling lucky, and the city of New Orleans is feeling pretty mad. So, and Brady's back in the Super Bowl. What can you say? Greatest of all time. And Mr. Goody Two Shoes, he swore on TV yesterday. I don't know if any of you caught it, but he said this is effing incredible. And that was, it's a fun weekend. It was a sunny weekend. So hopefully you guys had some good 3-day weekend stuff. We had to shake out the cobwebs to get back into the trading mode today, which we did. Let's call it a day and let's come back at it tomorrow. Remember, we want to see that if we hold these key levels, right, that 24,000 on the Dow, 7,000 on the the Nasdaq, and that 2,600 on the S&P. You've heard it over the last few days. You hear it a lot on CNBC and in articles and stuff. And everybody's saying, we probably need a retest. Well, the question is always, how deep is the retest? Because the retest will happen. And sometimes they're shallow, sometimes they're deep. Like anything else in the market, you have to use your technical analysis and you have to stay on top of it and pay attention. All right. So look, if you should always have a plan. And you see how we have a plan. We have a plan for what we expect the market to do, and we have a contingency plan in case it doesn't do what the market wants you to do, what we expect the market to do. Excuse me. Yeah, still shaking off the cobwebs from the weekend. But so look, gang, if you don't have a plan, we'll post a link down in the comments if you want to check out our service. It's a fantastic service. Nobody does it like we do with the customer support and the support system for you as a trader and the educational value. And of course, we just tapped out 250% plus on C. We just got a 100-something% on Monster. We've hit basically our last 3 cash outs were all over 100%. Most of them over 200%. So we took advantage of this V bottom. It was hard to sit through those 4, 5, 6 weeks of selling, but it set a nice plate. And as always, we had a plan. We've talked to you in the show every day about what our plan was, and it's come to fruition. So now we're at this kind of inflection point where we've been talking about this too. A little bit of softness is due, maybe a little bit of a retest, a little retrace, and we'll see how it plays out. But today it could have been a lot uglier. 4 weeks ago, this probably would have been a 700 800 down day. So there is some bullish strength to the market. The VIX is still right around that 20. It's been in that trickle down since it capped at 38, 39 on Christmas Eve, and it's still below the moving average, and the MACD is still looking soft. So maybe a relief bounce, but at this point, we're not willing to say it's much more than that. Okay. So look, gang, you guys have a great night. We hope you got some useful information. Like we said, we opened up a new trade in Home Depot, and we'll keep an eye on that with you guys going forward. All right. If you need some help, if you need some support, if you want to be on a team that cares nothing about anything more than you, the trader, then go ahead and check out that link we'll put in the comments. All right. And it's also in the description. So thank you very much for watching today. I'll catch all you guys tomorrow after the market. You guys have a great evening. Rest up. It's starting to get real tradable, this market. So you don't want to miss out on any of that opportunity. All right. Thank you so much for watching. We'll catch you tomorrow.